Today, the S&P 500 bounced back up to the 200 daily moving average, so we do have our dead cat bounce. Will it become something more? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. Today SPY was up 1.65%. And again, we are calling this just a dead cat bounce from this oversold condition. So there is nothing to get too excited about just yet. Remember, we have a downtrend of lower highs and lower lows ever since SPY broke down below the 200 daily moving average at 393. And we need to see some type of higher low into a higher high formation to say the downtrend could be ending. We have price action below all of our moving averages except for the 5 EMA. We have negatively sloping 20 daily moving average, and we're trading below the 200 daily moving average, which is our critical resistance at 393, and that is exactly where we got rejected from today. So when you look at this candle body, there's nothing extremely bullish or bearish about it. So we still have to go with the direction of the trend and expect a rejection from resistance until price action proves otherwise. So what that means going into tomorrow is that if we do break 393, we can start looking for the possibility to march back higher towards 398 to 400 because that is going to be the next critical resistance. Remember, we're letting price action guide us on our trading, so we're only getting bullish now if we can break above resistance because we already made our profits from the dead cat bounce. So from here, you're either shorting from 393 using that as your risk level, or you're waiting for that resistance to break down to go long for the run towards the higher prices. Now keep in mind, this is a downtrend, so the expectation is lower highs and lower lows until price action proves otherwise, and the downside support will now be 383, 385, and 380, and we are going to see a full-blown flush to the October lows if we break the lows down here around 377. So continue to let the price action do all of the talking and make sure your trade plan is prepared for any scenario because tomorrow we do have PPI data, so we're likely due for another large move. Today we were up 2.3% on the NASDAQ 100. And we closed above the 20 daily moving average, so we did have a very bullish move. So when you're looking at the triple Qs, you're seeing relative strength because we don't have the financial sector dragging it lower with a lot of the banking issues. So going into PPI data tomorrow, the triple Qs are the relatively strongest, and price action is back above all of the other moving averages, and we are above the 200 daily moving average. So on the triple Qs, you want to watch this critical resistance up here at 300 because that's the level that we need to see for the bullish breakout. So the trading range on the triple Qs will be 294 to 300, and we're instantly getting a lot more bullish if we get the breakout of 300 because that will be the break above the resistance trend line and a daily higher high. If we break down below 294, we're likely coming back down to 290, and 290 is a great risk level because that's exactly where the 200 daily moving average is. Now you can see we still do have a downtrend of lower highs and lower lows until we break out above 300, but there is the possibility we could get a higher low and then the higher high and still get the bull breakout at a later date. So again, we just need to be prepared for any scenario and let the price action guide us. If we break down below 290, we'll be looking for a retest of the low around 286, and below 286, we should very quickly flush down to 280 and then the gap fill at 273. On the Dow Jones, we were up 1.06% today with a very ugly doji candle on the daily chart, and we're still trading below critical resistance at the 200 daily moving average of 324, and we're still below a negatively sloping 5 EMA. So this is looking like a very good possibility of a rejection from resistance and then coming down to fill the gap at 311. Now keep in mind, there's no guarantee we need to go fill that gap now, so don't get sold on that idea. There is the possibility we could break through this resistance, get rejected at a higher resistance level, and then go fill that gap at a later date. So you need to be aware of that gap, but don't just assume we have to go down there and fill it right now. Look for critical resistance at 324 and 327, and if we start breaking that resistance, we will be looking a lot more bullish. But again, below resistance and with a strong downtrend, there's a good chance we're going lower, so watch that critical support now right around 318, because if we break that, it's a very quick trip down to fill the gap at 311, and these Bollinger Bands are expanding, allowing price to go lower. On the Russell 2000 IWM ETF, we were up 1.85%, and this is definitely only just a dead cat bounce because we were way too far overextended to the downside, and we're simply just correcting that oversold condition as these Bollinger Bands continue to expand, allowing price to go lower. Now we do have a gap to fill at 181, so there is the possibility this dead cat can bounce a little bit higher before we go any lower, and this is a very powerful downtrend of very impulsive selling, so we need to see where this capitulation is going to stop before we look for a possible recovery. Now assuming we've seen the end of the capitulation, of course there is the possibility we get that V-shaped recovery, but we're going to see it in the price action if that's the case because we'll blast through that gap fill and continue higher. So if you want to stay bullish for the small caps and you think this is a recovery that we're currently in, you need to set your risk down here right around 170, because below that we have the lower low and it's a very quick flush to much lower prices. Watch the other possible support and resistance levels right around 177, and if we break above the gap fill, we'll be looking for 185. On the ARKK ETF, we're up 2.14%, and ARKK is simply just dead cat bouncing right back up to resistance between 38 and 39, so there's just nothing yet bullish about this bounce. We need to break through resistance at the trend line, which is right around 39, and then we need to get back over 41 to get the higher high, and then we can start saying the downtrend is ending. A rejection from here would make perfect sense to send us to the lower prices at 34.6 and the gap fill down here just below 32. On the VIX, we were down 10.45% as the VIX is starting to crush, but overall, again, this is just dead cat bounce behavior because the VIX was way too far overextended and it's simply coming back down to a more reasonable level, which could be a higher low before the VIX spikes yet again. So this is still a very volatile market, and yes, volatility does work in both directions as you just witnessed with today's very impulsive move to the upside. But there is nothing bullish about a bounce if it's simply just a lower high before the next lower low. Remain cautious while the VIX is this elevated. On Bitcoin, we're currently up about 1.39%, and Bitcoin is currently trying to break out from that critical resistance zone at 25,000, and it's finding trouble because it's getting outside the upper Bollinger Band. Remember, nothing can go too far too fast without getting overextended and then needs to correct, and that's simply what's happening in Bitcoin. What you need to be aware of is this is high volume buying after we bounced off the 200 daily moving average, and I don't know how you can look at that as anything other than bullish. Bitcoin is a very risk-on asset, and if it's getting an impulsive bounce off the 200 daily moving average, it may be time to be considering it's possible in the indices. The break above 25,000 sends us to 30,000, and critical support is down here at 22,500. On Google stock, we're up 3.14% today as Google is bouncing off of that channel bottom low and coming right back up to the resistance at the 50 EMA at 94. Above 94, we have resistance at 95.6, and then above that, we likely start running back up towards 102. Critical downside support remains 91 and this level right around 88, and if we break down below that, we're likely coming back down to 86 and then 83. On Amazon stock, we were up 2.65% today as Amazon is bouncing off of that gap fill at 90, and we're right back up to some critical resistance between 95 and 96, and we still have another critical resistance just above at 98, so there is a ton of resistance levels in Amazon. We need to break through 98 and 102, and those are levels you can trade from if you're using the support down here right around 94. Below 94, we likely come back down to 90, and below 90, we likely fill the gap at 86, and if we break down through that gap, we're coming back down to retest the low at around 82. On Microsoft stock, we're up 2.71% as Microsoft is bouncing back over all the moving averages, and we're very close to our price target at the gap fill at 262. That gap fill could be instant resistance and we could get a lower high rejection, so do be aware of that. But if we break above the gap fill, we'll be looking for the next target higher at 266. Downside support levels will be 255 and 252. On Nvidia stock, we're up 4.78% as Nvidia did get the perfect bounce off of that support at 227, and we're back above the resistance at 238, and we're very close to testing resistance at 244. Above 244, we short squeeze to close the gap at 258, and you could stay bullish as long as we're above 227. If we break 227, we're looking for the gap fill at 211. On Tesla stock, we're up 5.03% as Tesla again is just getting a dead cat bounce from that oversold condition after reaching support at 167, and we're right back up towards the resistance at 183. We need to break above this resistance to get to the next target higher at 197, and if we could break 197, then it is looking like we could be ending this downtrend. Keep in mind there is this gap fill down here at 146, but there's nothing that says we can't go to 230 and then fill that gap at a later date, so don't get sold on the idea that that gap has to get filled now. There is the possibility we could go higher and then still go lower. However, this is still a downtrend of lower highs and lower lows, so if we do get rejected at 183, that will be an opportunity to send us back down towards lower prices at 173, 167, 160, and then of course the gap fill. On Apple stock, we're up 1.41% as Apple is back above all of the moving averages now, and we are starting to develop a bull trend, and the 50 EMA is positively sloping, trying to cross back over a positively sloping 200 daily moving average. I talked about this before, but there is the possibility this is going to be an inverse head and shoulders if we do get the breakout above 156, but you can't say it's a bullish breakout until we see price action confirm it. If we get the breakout above 156, we'll likely go to 170, and the critical support remains 150 and the 200 daily moving average around 148. On the financials, we're up 2.02% as the financials are still extremely oversold, which is no surprise with the banking issues, but at some point we are going to be due for a dead cat bounce that could take us back up towards 33 to 34. Critical downside support remains 31.37 because if we break down below that, we will likely see more capitulation. The industrials were up 1.06% today, again mostly just a dead cat bounce back up to resistance at 100.5, so if we get rejected from here, we could still come back down to the 200 daily moving average at 95. The healthcare sector was up 0.89% today, back over the 5 EMA, but still in a downtrend and still bearish below resistance at 129 to 130. The energy sector was up 0.99%, getting the bounce off of that support at 80.5, but still getting rejected at the resistance around 82.8. If we break support, we're likely coming down to the gap fills at 76 and then 73. So jumping back over to the S&P 500, this is definitely just a dead cat bounce until proven otherwise, so don't get overly bullish just because we had an impulsive bounce. That's exactly how volatility works. I said it before and I said it again, volatility works in both directions, and when you get a high VIX, you need to be cautious of very strong bounces if you're shorting the market. We're right at critical resistance and we have PPI data tomorrow, so if we break critical resistance, we'll be looking for higher prices, and if we get rejected, we'll be looking for those lower supports, and we'll let the price action do all the talking. If you want to come trade with the Stocks Channel Trading Discord community and get access to all of my intraday updates and analysis, you can find out how to join the Stocks Channel Discord by clicking on the link below. I also have a trade alert service called Bank Trade Alerts that sends you all of your buy and sell alerts directly via email and text message and only trades the ETFs TQQQ and SQQQ. You can find out how to join Bank by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.